Good evening, guys, and welcome to the live market analysis brought to you by Oxshare. I'm your host, Jimmy Jabbour, Senior Technical Analyst and Financial Advisor here at Oxshare. First, let us begin with the calendar, the economic calendar, see what news we have this today, and what news are coming up in the upcoming week. One important news was today Jerome Powell spoke, and it was about the economic outlook. We're going to see how the market reacted to these information spoken by Jerome Powell. In the upcoming days, we have the jobless claims. It's at 3:30 Beirut time, and then we had we have Jerome Powell speak again tomorrow at 9 p.m. Then we have the GDP for the Great Britain at 9 o'clock in the morning. That's on November 10th. And that sums up a bit the economic calendar for these two upcoming days. So now let's jump to the charts. First of all, we're going to take a look at the VIX. That is the volatility index. This index is very important for traders. It gives an outlook about the inflow and outflow of cash in the market. As you can see, with the start of the month in November, we've seen a big decline in the VIX, meaning that money has been pulled out from the market by investors and traders. This is typically very logical as traders begin to prepare for the month of December, which is known for low volatility due to a lot of holidays and closing end of the year for big companies. So as you can see here, we've had this dramatic pullback on the VIX, signaling that money has been taken out from the market. Let's jump to some forex pairs. First, we're gonna see the Euro USD. As you can see, as we spoken in the last live on Monday, we spoke about this high being taken out here, and that the market has shifted in structure. We are currently moving. We are currently doing higher highs and higher lows. Breaking this high was important, and the pullback was anticipated. We spoke about this in the live on Monday. So if we take this high has been taken out. If we take the Fibonacci levels, we can see here the perfect retracement to the golden ratio, the 0.618, coinciding with these highs. So we saw a bit of bounce over here. Now, these levels are very important. The next critical level is to break these highs, and we'd have a double bot forming on the Euro USD. Targets will be this high, and then if we can go to the higher time frames, we can see furthermore targets related to these resistance area over here around the 106 108. So this is related to the Euro USD. Let's see the GBP USD. Uh, same analysis approximately. We have this high that has been taken out. Okay, we've been doing lower lows, lower highs for a couple of months, from July till October, until we broke this high with a big candle. A retracement was anticipated. Let's see how much we retraced. We have this big candle over here and this imbalance that formed. this big imbalance. We retraced back to that imbalance. If we take the Fibonacci over here, we can see that we broke the 50 level. 50 level is the equilibrium for this range, where price is at equilibrium. It's not in premium nor in discount. If we want to buy, we look for price in discount areas that's below the 0.5. So once we broke this high over here, signaling a market structure shift, we start to look for longs. So we had this huge imbalance over here, and the midpoint of this imbalance was around 1226. As you can see, price tried to push through this and couldn't, and now we bounce back. So the GBP looks very lot similar to the Euro USD, and that is quite understandable as the pairs move together in negative correlation with the USD, with the US dollar. We're gonna jump to the gold. Let's see what the gold did. Let's go to the daily. Okay, we'll start with the weekly. As you can see here, there is this flag pattern forming over here. We have these relative equal highs over here. These are the liquidity magnet. And what I mean by this is that price is attracted to these levels to be taken out. Plus, we have the geopolitical tension in the area driving this move. If we take the pole of the flag and project it from here, we'll get approximately at the same level. What I expect is this retracement will continue until we reach a level of discount. And what I mean by that is that we have this pull over here, this expansion over here, and this resistance level. I expect price to drop down, dip into these areas, consolidate a bit, and then rush back up, taking out the levels at 280, 260 levels. So we are still bullish on the gold, especially with all the tension and war going on. So it's very important to stay patient and not rush into trades. We have this imbalance over here as well that can be considered as an attraction for the price. The price might dip to this imbalance and then rush back, taking out these highs. First target is going to be over here, and then we're going to push higher to 240, and then take out the historically high levels on gold. This is related to gold. Of course, over there we had the opening range of the price. We took out, we had a big gap, and then we moved upward in a very expansion way. A correction is expected at this point, since the market needs to breathe a little bit. So it's very important to stay patient and not rush into trades. Next, we're gonna see the oil. As you can see, we have shifted structure on the daily, and that is big news for oil. We broke this low, and now we broke this low again. So oil is turning bearish at this point. Of course, once oil turns bearish on higher time frames, we start looking for shorts. So to get a good entry point, we need to identify some resistance level to take our shorts from. It's very clear on oil. The resistance level are approximately at the 8280 levels over here. and we have this big imbalance over here where the candle pushed to the downside in a very aggressive way, taking up these lows, and then we wait for a retracement back up, and after the retracement we can start looking for shorts. We have these levels over here as well, where price respected it in the past, as you can see here, over here, over here, over here as well. Here we got respected again until we broke up and then retraced back and then pushed to the upside. So the 73 level is an important level to look for as take profit as targets. Uh, if we go down in the time frame, we can see that in the daily we have shifted in market structure. So when we go down in the time frame, we're gonna see oil pushing downwards in an aggressive way, as you can see over here. As you can see over here. So these levels here, these equal lows, relative equal lows over here have been taken out by this candle, retraced a bit to the 0.618 level, Fibonacci level, and then pushed downwards, targeting this area over here. So once we broke this level, once we broke this level over here, we could have, and going down in the time frame, over here. So this level got taken out on the daily. Okay. Then we pushed up, respecting these highs, pushed down again. We taken out the liquidity below these lows with this candle. A good entry would have been along the 0618 areas, and then targeting the lower time frame, targeting the higher time frame targets like this lower low here. Okay, so after market structure shifting, it's time to look for shorts. So we need a good entry price. We just wait for a retracement. We go down in the time frame, and then once we have the price in a premium level, we can enter the trade. Let's go look at the US 30. As you can see here, we have been taking out lower lows over here. Market structure is shifting, and we have this big move to the upside. If we go to the weekly, on the weekly time frame, we had this move to the upside over here. This high has been taken out. This is the area, the supply, the demand area that we reached the last week. This is the area that the move came from. As you can see, this move over here, breaking this high, came from this demand area. So we expected the price, once it retraced, to dip into these areas and then move to the upside. Of course, we couldn't have known this move would happen and this aggressive move would happen, but it did. Now, as traders, typically after a big move, this weekly candle, we haven't seen in a year on the US 30. So after a big move, after a big week for US 30, we can expect a bit of consolidation. Okay, so we have this weekly imbalance over here, as you can see. Price move, couldn't retrace back, and then left this imbalance over here. We are currently closing this imbalance. All right. So on this is on the weekly levels. If we go down in the time frame, this high, this liquidity present above this high is being taken out right now, and we have this imbalance over here that we are currently dipping in. All right. So it's all dependent on the last month of December, and we know the last month of December is a bit slow for the markets, as the VIX has shown. The VIX go down, money is being taken out of the market, traders are getting prepared for the holidays, big companies are closing their books, so we can expect a bit of consolidation related to the indices. As you can see over here, we can expect a bit of consolidation before the market deciding where to break, if we want to break upward or downward. So we should be careful in relation to the indices. End of the year are considered slow for the market, especially for the indices. So it's very important to stay vigilant in these hours. Plus, we have this double top over here, as you can see, this double top, and we broke without retesting it. So this breaker and this neckline is being tested right now, plus this imbalance here, as we can see, between this candle over here and this candle and this candle. So this is an area to look out for. We are being rejected over here by this imbalance. Okay, so what a trader can do, this is considered a resistance area. So if you go down in the time frame, what we need to see, this is the area we are talking about on the high time frame. What we need to see as traders is we need to have this level taken out by a big candle. Okay, this level taken out by a big candle, retracing back, and then pushing to the downside, targeting these areas over here, targeting these areas and these areas. Uh, this could be the first target, and this could be the second target, but we need these levels to be taken out. Market structure shifting at the lower time frame. So when we shift to the when we shift in the lower time frame to bearish, we need this level to be taken out. Plus, we need a big aggressive candle to take out these levels. We need the retracement to be in the discount and the premium level above the 0.5, and then we can target the lower time frames. We can target these lower lows at the lower time frame. This can be a good setup if it happens. So we need some conditions that happen to take these trades. One of them is taking out these lows. Then once we take out these lows, we can start looking at the lower time frames for sell opportunities. Okay, this was it, guys. Thank you for tuning in. I'll be back on Friday with some more live market analysis. Stay safe and trade safe.